it's a really rewarding role. You see new clients, join the business, and they're peeling back the curtain in the early stages, thinking, these guys are for real. But it's great to be able to build that rapport with them and really add value to their investment journey. So,
How do you
looking
do
at the
that?
best options in the market, Tab, for them,
Yep.
and helping them understand that from an investment perspective.
You're listening to Property Investor Tales, stories from the front yard. Here's your host, Tabitha Bright.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name is Tabitha Bright and I'm head of coaching here at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Riley McNee. And Riley's one of our internal team. He's what we refer to as a property consultant. And Riley's background has been over 18 years in real estate. And we talk through what makes a quality investment. And he details what property purchase he recently made that is looking like delivering 50,000 in cash flow per annum, which is pretty damn amazing. Lastly, make sure that you hang around as Riley shares one of the spookiest stories that he's come across in real estate. So enjoy this conversation with Riley. Hey, everybody. Welcome to today's podcast. Today, I have one of our team, the fabulous Riley McNee, and he's here with me, and we're going to talk a whole heap of stuff property. But firstly, welcome to the podcast, Riley.
Thank you, Tab. Thank you for having me. I've been listening to all your episodes, and I thought, geez, what have I got to do to get a tap on the shoulder here?
I never know whether it's whether people are dreading the tap on the shoulder. So, I do try to give everybody a bit of leeway. You could have tapped me on the shoulder and put your hand up and said, Tab, I'm in.
No, I've just enjoyed listening to them, and they've been great. So good stuff.
You're a good man. And we are missing someone tonight, and we're going to do a shout out to her. Tiffany, Riley's better half. I can say that, can't I, Riles?
You can.
And I was looking very forward to interviewing Tiffany tonight, Tiff. But yeah, as she said, and Tiff, I'm going to out you because you're not here. You didn't have the eyebrows and your makeup on, so eyebrows done and your makeup on. So you're off the hook, my friend. But we'll nab you another time, maybe.
Nice, Tab. She'll like that.
So, yeah. Alrighty. So tell me, Riley, to explain for anyone that's watching today, what do you do at Positive Real Estate right now? I mean, you're moving into a new role, which is exciting as well. So we can talk a bit about that. But what do you do for Positive Real Estate?
So really, my role is as a property consultant here at Positive Real Estate, and a lot of new clients, they come into Positive Real Estate and they think, well, here's the guy that's here to sell me an investment property, so to speak. But really, our job is a lot more detailed than that. We're there to help clients consult them on their property investment journey. So where I come into the piece is obviously the coach looks at things from a holistic approach. They sit down with the clients, look at their goals, what they're trying to achieve, what's their financial capacity like, timeline. You know this better than anyone, being the head of coaching, clearly. And my role is really to look at the options that we've got available in the marketplace, and look at what are the best options that are in line with the investment strategy that the coach sets in place. So it's a really rewarding role. You see new clients, join the business, and they're peeling back the curtain in the early stages, thinking, these guys are for real. But it's great to be able to build that rapport with them and really add value to their investment journey. So
How do you
looking
do
at the
that?
best options in the market, Tab, for them,
Yep.
and helping them understand that from an investment perspective.
Awesome. So were you answering my question then when I said, so how do you add value?
Oh, I didn't hear that part. So
Ah,
how do
I snuck it in between a gap when you were taking a breath. So how
yeah.
do you, because you said that you as as we call them PCs, so property consultant, adds value. How do you add value? What do you do?
Well,
Putting
property
you on the spot
investing.
after I said I wasn't
No,
going
no, no,
to.
no, not at all. Not at all. Like property investing is very different from going out and buying a home, right? And there's
100%.
different properties and different strategies in regards to the real estate that
Mm,
will help clients achieve their overall goals, right? So that might be in the sense of, we've just saved up a 10% deposit now and we need to save further savings to pay our stamp duty costs. So that might be a strategy of going into an off the plan property. And when we're talking about investing, there's always trade offs. There's always
mm,
pros and there's always cons to a property and a strategy and a marketplace.
yeah.
So it's really just about educating the clients as much as possible so
Yeah.
they can make a logical decision moving forward.
Yeah. And feel comfortable with that decision. Yeah.
100%. It's removing the fluff. I like to remove as much fluff as possible, and look at the data, look at the market evidence, look at the numbers, and ultimately determine does this property ticks the boxes for our strategy.
Perfect. And if we were to lift the curtain, so to speak, and go behind the scenes,
Mm,
one of the things one of the things that we do with the team is when we meet with Sam Saggers, that all of you guys will probably know, and our acquisitions team, and that go out and find the deals. And we brief the property consultants on the deals that are coming through. And I think it would be, and correct me if I'm wrong here, Riley, a big part of the briefing is talking about the upside of the deal. So what's great
mm,
about it, why a client would consider it for their portfolio, what strategy it suits, what price point it is, what market, etc. And then there's education on that market. But then the flip side of that is the team are also very skilled at talking through what we call the trade-offs of any property,
mm.
because you never, ever, ever have something that is only one thing, only good, only a great deal, without there being some corresponding trade-offs. It's the yin and yang of life, I guess you could say.
Yep.
And so what Riley and the team do is when they meet with a client and they take them through a deal, they'll talk through what's great about that deal and why it's good potentially as an option for that client, plus
Mm.
any of the challenges that might need to be mitigated. Is it a bigger development? Is it in a market where you're getting a discount, but that means that the rents might be softer? Like there'll always be a trade-off. And I think talking through those trade-offs garners a lot of trust because people feel like they're not being sold just anything and promised some unicorn of a property. Is
Yes.
that your experience?
Without a doubt, we
Yeah,
the PCs have a little bit of a joke that a well-informed client is a good client, and this is
absolutely.
why we try and get as many of our clients along to mentoring as possible, to
Yeah,
tune into as much education as possible, so they feel empowered. They know, okay, I've looked at the data, I've looked at the evidence, I'm comfortable with my decision moving forward because
yeah,
ultimately it is their name that is going on the contract. It is
100%.
the clients purchasing the asset,
Yeah,
and the asset's going to do the heavy lifting for us over the next 10, 15 years to achieve our goals. So they've got to understand what they're buying and why are they buying that property. So most certainly we can be a little bit of a spanner in the mix at times to the acquisitions department because they're very diligent in what they present to our clients. I
yeah,
was chatting with a client earlier. He said, "How many properties have you guys got on your books?" And I said, "Well, we've got a fair bit on the market at the moment in different locations, different states, but to give you some scope, of what goes on behind the scenes." In our acquisitions funnel at the moment, we've got over 110 properties. And those properties have got to go through 14 different stages, checks and balances, before a client's actually looking at a property investment report. So
mm,
out of that 110 properties, clients may only see, anywhere from 5 to 15. It's a
mm,
pretty much a culling process.
yeah, yeah,
And so a lot of that due diligence is done up front. for our clients here at PRE, and I think that's there's a lot of value in that clients don't see.
Yeah.
But then it's also too, like you said, just walking them through. Look, these are the pros, these are the trade-offs. You need to be aware
Yeah.
because, like you said, Tab, if we wanted to buy in the best suburb, the best property in Australia, well, the trade-off there is going to be the price tag, right? So
Yeah.
there is
And the
always
yield.
trade-offs with really, yeah, yeah. So and the yield, exactly right. So there is, yeah.
So I'm going to circle back around to something you said because we haven't clarified it, and I think it's really important. You had a
Good.
grin on your face, and you said we're a spanner in the works.
Oh
So
yeah,
I want to go back to that. Why are you a spanner in the works? For the clients or for the acquisitions team?
for the acquisitions team.
Oh,
Um,
good to know.
well, one, we like to ask a lot of questions
Good. Yep.
because we need to be as informed as possible.
Yep.
We're pretty well detailed for a team. Like we look at all the detail things.
Massive.
I've been doing this for years now, every day. So
Yeah.
my eyes might pick up something much quicker than a client would, for instance. So
Mm.
we literally, we see the property and go, that looks great, but we tend to pull it apart and look at the trade-offs before we look at the positives on a piece of real
Ah,
estate.
yeah.
So it's a bit of
Yeah.
our process too of completing some due
That's
diligence
great.
on the property. I know all the PCs do this as well, that
Yep.
obviously the acquisitions department complete due diligence on property, but
Yep.
then we do that as well on deals because ultimately it's me chatting with the client.
Yeah. It's your face,
And exactly right.
your
And
relationship.
I need to know what I'm talking about. And, at the end of the day, we all want our clients to get the best possible result. We really do. And it's a responsibility we all take very seriously here at PRE. I know I do. Yeah, I love it. It's good.
Awesome. And your I'm going to come to you and your history and your background and some of your story in a second. But before we do, so you're moving into a new role shortly, which is a bit exciting.
It's very
Yeah.
exciting.
Yeah, you're
Yeah,
joining the other side. You're going over to the dark side.
I am indeed. So,
Tell us about
uh,
that.
well, I'll be stepping into the acquisitions department
Oh,
pretty much as we speak, as of
yep,
this podcast. So this has happened in the last 24 hours, but
yep.
it's something I'm really excited about. Obviously, I get to work closer with Sam, and I've got a bit of a man crush on Sam, so that suits me.
Don't we all?
So, but no, it's, property real estate is my passion. It has been my passion now for a long, long time. So it's just looking now on the other side of the fence,
Yeah,
how we look at, potential real estate from a short term to a long term perspective for our
yeah,
clients,
yeah,
making sure it's safe and secure. And ultimately, it's going to get the runs on the board for them.
yeah.
So that I am super excited about. I'll miss the PC team and whatnot, but no doubt, my clients will still see me around. I'm not going too far away.
Yeah, we won't let you go too far. Keep pulling you back in, and we'll send you around the traps once we're all doing face-to-face events again, so you can see all the clients.
Yeah.
But so you're going to be responsible essentially for bringing deals on for clients. You'll be
Correct.
out there analyzing the market, analyzing deals, talking to developers, talking to builders,
Mm.
and bringing on fantastic options for our clients. So, I couldn't think of anyone better to do it. Congratulations.
Thank you, Tab. And no, looking forward to it. Really looking forward
Oh,
to it. Yeah. So,
fantastic. Fantastic. And so then my next question, let's dig a little deep and get personal with Riley.
shoot.
You're a good sport. You said gloves were off. I could go. I could go right in there, but
Yep.
I, I'll be kind. However,
Shoot from the hip,
tell us
Tab.
a little. I just thought I'd tease you a little bit. Tell us a little bit about you. Like, what's your real estate journey? Because to me, I'm 53 and I'm looking at you, and you look all of 25. So, can I be impertinent?
Yes.
Tell us a little bit about Riley. You're married. You've got how many children?
Yep. So I'm married. We've got three beautiful children.
Oh,
two boys and a girl, so very blessed. You mentioned Tiff before. Tiff's my lovely wife. We've been together now, I should know this, 14 years.
I can see the squint in your eyes.
Hopefully, she just watches the first couple of minutes of this. I'll say, don't worry about the rest. It's not important. But yeah, three beautiful children.
Yeah.
And, when it comes to real estate, I'm a little bit of a nerd in that regard, where property is pretty much the only thing I've done. Like, I worked at Domino's for a couple of days when I was a kid, like 14, 15. But my
Really?
father, yeah, my dad had an agency on the North Shore of Sydney,
Real estate agency.
real estate agent, yeah, so residential,
Yep.
in one of your more affluent suburbs in Sydney. And so I graduated from high school. I went to university. I was doing my degree, and then I started to get involved in the business just part time. And
Yep.
it started off pretty simple,
Yep.
letterbox dropping, and then it evolved into door knocking and meeting clients, and taking
Mm.
people's names and numbers. And I really liked real estate. I liked the personal side of it. I liked the relationship side of it. Dealing with people, going through the highs and the lows and the journeys that real estate brings. So, I completed my uni degree and did not use it once. And
Oh, so what have you got a uni degree in?
so I've got what have I got? I've got an honors degree in media, communication, and marketing.
Is that
You didn't
right?
know that, did you?
No. Do you know what
Yeah.
I've done a paper in? I never got any
Yeah.
further than one paper.
Yeah.
Zoology.
Zoology. That's that's pretty cool. I didn't even know there was.
Yeah, I've done.
I
I've
didn't even
started
know
a
there was something
zoology
like
degree.
that. I could picture you
I know,
like
it's these weird things you find out about people, right? So you've got a marketing degree.
I do.
Oh,
Yeah.
we have
So
to tell Shay that one too.
yeah. So yeah, it's it might even be cultural studies in there. I can't recall now. It's been a
Mm,
while.
yeah.
I don't know where it is, to be honest. But yep, I went to Macquarie University, graduated, did my honours, um,
Fantastic.
got involved in the business part time, and then that gravitated into full time, and I never looked back. Dad's old school. He's not in the business of giving you a leg up and saying, "Here it is on a silver spoon." It was, no, mate. You go out and get your own clients. You door knock, and you need to learn from your mistakes. So, Dad was really, really good in that regard. I didn't appreciate it at the time, but I learned a lot of valuable lessons.
I bet.
And Dad's been in real estate now. He's retired now,
Mm,
but probably the best part of 40 odd years. So
right.
him and I just talk about real estate all the time, pretty much.
Ah.
So
Oh, to
yeah,
be
so
fly on the wall. And so tell me, how old are you?
I am 38, not
38.
25.
Okay, so a decent amount of real estate experience behind you.
I do.
And
Yeah.
and how long have you been at Positive Real Estate now? I should know
I've
this.
been, yeah, you should know this. Well, I think it's around about 5 years now with PRE.
Ah,
So
yeah,
it's five. Yeah. So yeah, been a while.
decent
Positive
stint.
real estate.
Half a
It's it.
decade.
Well, there you go. Jeez, half a decade, and very different to the residential side of things. And clients often ask me about this. Which do you prefer? Easily this, and for a
Right.
couple of reasons.
Yeah.
On a client interaction basis, when you're selling residential real estate, you're dealing with mums and dads. They've got a change in lifestyle that they usually sell up and move away, and the relationship dissolves. Whereas this, with helping investors, it is a long term, property investment is a medium to long term investment strategy. So you would have worked with clients for over 10 years, Tab,
Yeah.
and
100%. Longer.
you see it's very rewarding when you see that you've had an input into effectively changing the direction of their lives
Yeah.
through property,
Yeah.
which is really cool. I've got some really close relationships with a lot of my clients. They'll ask me how my kids are, and they know my kids' names, and um, So that was very different. I like that long-term journey together, and if you're getting the results on the board with clients, you become a lot closer, a lot quicker,
Of
which is
course.
cool.
Yep.
But I forgot your question now, Tab.
Oh, I was just asking about how long you've been at Positive Real Estate, and you were waxing lyrical, but it
I
was good.
was waxing lyrical. Yeah, yeah, five odd years. Yeah,
Yeah.
so loving it.
And
Absolutely love
and
it.
sorry, I didn't mean to cut you off there. And
No, you're
so
right.
one of the things that we encourage at Positive Real Estate is for all our team to eat our own cooking. So
Yep.
all of us are much like many of our clients, and we've all bought deals through Positive Real Estate. I know Jason and Sam, Jason will often talk about how his entire portfolio pretty much is the same deals that our clients do. So, Riley, you've recently purchased an
I
investment
have.
property through Positive Real Estate. Tell us a little bit about that and what drove your decision making. And you may have some clients that know that are going to be your neighbor now.
I do actually. One of my lovely clients, he's literally going to be my next door neighbor.
Ah,
Um,
fantastic.
yeah, he's shout out to Nigel, shout out to Marilyn. They're lovely people. But I guess I'll answer that question in twofold,
Yeah,
and I'll circle back to the last topic that we're chatting about. Why I enjoy helping investors is also coming from a selfish perspective,
yeah,
because I love real estate. Being a part of positive real estate and the access to deals that we get, um, and the opportunity we're able to provide to our clients is literally second to none. And I do believe that. And someone that's been in the industry now for over 18 years, because I did start actually just before I graduated from school.
yeah,
You know, some of the property deals that we get access to, you won't see them in realestate.com. You won't see them in the back of a Qantas magazine. And you can really capitalize on that.
yeah.
And I remember when I first joined Positive Real Estate, I'd been in chats with Sam for a while, and he was explaining the inside track of how Positive Real Estate assesses markets, looks at opportunities and whatnot. And I thought, geez, these guys spend over 200 grand. They know the best places to invest in. This is like insider trading. I'm in. So, it's the deals are awesome. And you're right. I did recently purchase in the Melbourne market. The strategy that I went for and was coached is the off the plan strategy,
Yeah.
and I did that for a couple of reasons. Right at the moment, I purchased in Melbourne,
Yeah.
and one of the early lessons my dad passed on to me, and it was a bit of a corny cliche, but I use it all the time with clients to explain it. It's, when it comes to real estate, son, buy cheap and nasty, you get cheap and nasty results. And so that's always stood the test of time with me. So I always
Fantastic.
like, yeah, so I've purchased a beautiful two-bedroom apartment in a development by Benson's on
Mhm.
Chapel Street in Melbourne, which is, iconic address for the Melbourne market.
Yeah.
So
Yep. Round the corner from me. So you got me as a neighbour
round
as well.
round the corner from you, yeah. So I'll
Yep.
be
In
coming over
Paran.
to,
In Paran.
yeah, I'll be coming over to have some of that home cooked meals that you
Oh,
do, Tab. If anyone doesn't know, Tab is a bomb cooker. She's awesome.
I like cooking, but I'll be coming to you because I'm going to hit you up for a stay because you're going to Airbnb that potentially, aren't you?
Yeah, I looked at it from two reasons.
Yeah.
Like the Melbourne market at the moment, the gap between the median house price and the median unit price is the widest it's been in recorded history.
Wow.
And so I
So what
thought,
does
well,
that
this is
mean? What does that mean for people?
what that means for people is, when we're talking about different property types, more often than not, different property types will move at different times in the marketplace. And usually, when a market first takes off, it's usually the housing market that will go first.
Mm.
And once the housing market starts to hit the affordability ceiling,
Yeah.
start to see the townhome space, the apartment space close the gap.
Yeah.
So I'm quite analytical, and I was looking at the Melbourne market. I could see a couple of things that were we're fostering. I thought this is now or never to buy quality
Yeah.
dirt in the Melbourne market. The
Stop you
gap
there.
between,
Stop.
yep,
Oh, sorry. Were you going to talk about the gap?
yep,
Oh,
yeah,
great.
I was.
Because I want
You're
you to
right.
close the gap on the
Close the
gap.
gap. So the median house price at the moment in Melbourne, over 1 mil these days. So it's
Yep.
getting very expensive depending on who you talk to. It's
Yep.
between 950 to 1.2, but the gaps here and the median unit price is the gap between the median house price and the median unit price is the widest it's been
Yep.
in recorded history, as I mentioned.
So what does that mean?
What that means is now that you're going to start to see the apartment space start to close the
Close
gap.
the gap.
And we're already seeing that at the moment. We're seeing that in rent returns. We're seeing this in yields. We've seen the vacancy rate plummet. I also noticed, obviously, during COVID, Melbourne copped the brunt of COVID for the best part of 2 years, and the effect that had on the Melbourne market was, and across Australia, was that people didn't necessarily need to live in the city, and they wanted larger living spaces. You could see the number of property searches went from 2 beds to 3 beds to 4 bedrooms,
Yeah.
had the lion's share of the searches.
Yeah.
But from March 2021 to 2022, as Melbourne started to get back into the
Open up.
groove of
Yep.
normality, there was a 150% increase in searches in inner city apartments,
Isn't that interesting?
massively. So you've got the largest gap in recorded history. You've got a 150% increase in interest into that property type. That property type, that location, prior to COVID, Melbourne was leading the charge in rental and capital growth, and coming into that last quarter of 2019. And really, what was driving that at the time is Melbourne was our most undersupplied market per capita. So you've got this perfect recipe of, the apartment space is starting to close. You've got people starting to come back to the CBD, and you've got limited supply. So
Yep.
I learnt in Sydney that the longer you leave it, the harder it is,
Yep.
and you'll eventually be priced out of the marketplace.
We're seeing that, aren't we, really? We're seeing it
We,
happen really quickly,
we,
particularly in
we are.
Brisbane as well. Yeah.
Brisbane, Melbourne, inside track guys, I think we probably got sort of 12 to 18 months to get a footprint in those marketplaces. And then Brisbane/Melbourne become like Sydney, where investors, it just doesn't make sense from a purchase price versus rental return perspective. The gap's widened.
And we've seen some crazy results in that space. Like I know that you were looking at a property that some of our clients had purchased in Surbiton Park,
Yes.
and they'd purchased for what, 600? This is in Brisbane, by the way. Our
Yeah.
townhouses.
And this is testament to, this is evidence,
Yep.
I should say, of different property types will move at different times, right?
Yeah.
Because it's all been, Brisbane's housing market has been in the spotlight.
Yeah.
And the townhome space over the last, probably in the last 6 months has really picked up in momentum in terms of capital growth
Yeah.
and values of real estate changing.
For good
Prior to that, it
affordable.
was all the housing market. And now the apartment space has started to close the gap. And the townhome development you were talking about is in Everton Park. We had clients that went in there in 2019, paid 627 to 630K for 3/4 bedrooms. One of my clients at the moment is refinancing that investment property, and the valuation from the bank has come back just shy of $1 million, 985 grand.
Oh
So
my goodness. So a
yeah,
300K uplift in 3 years. Yeah.
not bad, not
Not
bad,
bad at
not
all.
bad at
Not
all,
bad at all. Yeah.
and a 5.3% return as well, rental return yield.
Right.
So
Right.
phenomenal, and it's a
Yeah.
gorgeous development. It actually took out the UDIA 2019 Best Townhome Development in Australia.
Yeah.
And for you guys that may not be aware, for us property nerds and developers out there, UDIA is the award they all want to win.
Yes. Yeah.
So quality piece of real estate. Yeah, It's a good one.
Awesome.
Mm.
And so the property that you're purchasing, because sometimes people get a bit nervous about off the plan as an option. Sometimes there's a concern that groups like us, we like to separate ourselves from most of the groups out there, but groups that do education and property sell a lot of off the plan, and it can be the case, but it's not always the case. And off the plan doesn't mean that it's a bad decision. Off the plan is an incredibly useful strategy, and we've seen clients get some amazing results with off the plan purchases. However, there's some rules around that to do it successfully, and not to get caught in a building that's 30 stories high with 500 units and little boxes that have no soundproofing, and and you can't rent. Like, that is not something that you'd ever buy as an off the plan, although people do get themselves in a pickle in that space. When we're talking off the plan, we're talking, often low rise developments, good quality, fantastic floor plans, as much space as possible, parking where possible, preferably not stackers. Sometimes stackers are an option. There can be a whole raft of rules around successful off the plan purchasing that means that you get a great result, and you do get that uplift that sometimes people have a perceived idea that you don't. And so the one that you've bought in Paran is certainly poised for some decent growth in that space. It's a great floor plan. You and I went through it and had a good look at it.
Yeah.
The benefit of working at Positive is you can tap everyone on the shoulder and get their opinion. Lots of experts, I tell you, everyone's got an opinion. But it's an awesome one, hun, and I know you'll do really well out of that. So tell me, are you going to Airbnb it? Because that was an option, wasn't it?
It was. And so I'll answer that question in twofold, and I didn't really close the loop there, so sorry about that. We started freestyling a little bit, but
I know. Yeah.
Two things. Reason why I bought that property, and that ties into what you just said. The first appeal to that property was the power in buying that property off the plan. Where people can fall into danger buying an off the plan property is, like you said, they're just multiple buildings, 40 stories, cookie cutter, rinse and repeat. And these, where you've got too many investors in there and not enough owner occupiers.
Yeah.
And you're not wrong. We've had some phenomenal results recently where clients have, bought for X and have made Y at completion of buying off the plan. And the trick to that is buying in a good location, buying in a quality development where a fair portion of the units, properties, whatever you want to call it, in that development are catered towards the owner-occupied market. Yeah. So in the development I've purchased in, there's only a block of 60, and I've got neighbours in that development that are spending $1.7 to $7.8 million on property.
On their units. Yes.
On their units, right?
Yeah.
And I know that those more expensive units, majority of those are not going to be sold off the plan. Yeah. The owner occupiers are, they're not going to look at a floor plan and go, you know what, this is us and the kids 3 years from now. They will be sold at completion to either the downsizer market, the owner occupier market, basically the emotional buyer. Yeah, you Tab.
The downsizer
exactly right.
market.
Exactly
People
right.
my age, yes.
Yeah, and that's how real estate works, right?
Yeah.
What sells nearby to me directly impacts the value of my property. Absolutely. So I might have a 3-bedroom home and there's a 5-bedroom home across the road, but the sale of that property directly impacts the value of my real estate. Yeah. So I've thought, well, a small portion of this development will be sold to the likes of investors like myself, but come completion, a lot of those will be sold once they're completed to the either downsizer or emotional buyer, where they will tend to pay overs. And good real estate like that, it's now becoming a rarity in the marketplace with supply levels where they're at. And I think I've taken some good lessons from COVID as well, where where we see the best results in real estate in forms of investing is when that property's got versatility.
Mm.
And what I mean by is in versatility in terms of either the category of buyer that property might attract now or into the future, because different categories come with different budgets, i.e., downsizers, young couples, etc., etc. But I looked at it from a perspective of cash flow. I looked at it, well, this property today would be returning circa $50,000 on an 80% occupancy rate, and Chapel Street, prime location, you shouldn't have an issue there if you're priced competitively. But I'm hedging my bets that that $50,000 will turn into $100,000 over the next 10 years in cash flow. So I think I've
Is
got the
that with
best of both.
Airbnb?
Yes, so that is
Yeah.
in the Airbnb. So it's not something I want to do myself. I haven't got the time to do, bookings
Manage it.
and
Yeah.
manage it. I got no interest in that. But we've partnered up with a couple of great groups out there that have got a proven track record of
Yeah.
pretty much looking after it seamlessly, and they get their clip, and as they should. But the cash flow on that property is pretty amazing. And
That's
I've got
awesome.
yeah, what's rare that you get, cash flow and growth walking hand in hand.
Yeah. Yeah. Yeah.
So, quite a unique opportunity, and I'm very
You're
excited.
pumped.
I am.
I
I
can
can't wait.
tell. I can tell you've done your research on it too.
I
And
have.
and so I'm going to change gears a little bit. I'm going to ask you two questions. What's the craziest thing that you've ever seen in your real estate career? Either a story that's happened to you or has happened at your office or has happened to a client of yours. What's like one of the craziest things you would have seen? And it doesn't have to be PC. I'm sure everyone enjoys a little bit of something that's a bit sideways.
You know, when you you see a lot of funny stuff
He's
over
getting
the years.
uncomfortable, isn't he?
No, 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 not at all. I'm just sort of scanning my brain, which would be
Yep.
probably the
I'll put you
funniest
on the
story.
spot. Yeah.
No, 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 no. Like you see the good and the bad sides from people sometimes when you're walking into their homes. You might see, in residential real estate, I'm talking about. So I've seen some bloody good fights and domestic blues.
Oh,
I've I've seen
how
two
awful.
guys get in a punch on at an auction. Um,
Tell me about that.
yeah, so it was would have been probably around about the GFC time,
Oh,
right after the GFC. And during that period of time was really interesting. I remember selling real estate, and we would literally get buses in suburbia that would pull up with 30 to 40 foreign investors just going around, just buying up everything they could in Sydney. And um, we had an auction that they attended, and they were Chinese buyers.
mm.
And there was a bit of toing and froing, and one actually spat at the other, and one picked up a chair
On
and
the
threw
same
it straight.
bus.
Yep, from the same bus. So you can imagine that bus ride back to the airport. But yeah, they were into it. That was
Different
interesting.
year.
It was definitely an eye opener. So one of the bidders spat at one of the others, and the other one picked up a chair and threw it at him, and then there was a bit of argy bargy that went on. Um,
It's nuts. Real
I
estate,
yeah,
yeah, real estate pressure, money,
right.
expectations. It can be a heady mix, can't it? Anything else?
Um, yeah, I've caught people in uncompromising positions. Um,
It seems to be it seems to be a pretty common story for people.
yeah.
I think Sharon, one of my earlier podcast episodes, she had tenants of hers that she had to go around and ask them not to have such noisy relations because the people next door were complaining. So, it just seems that we're all human, right?
Yeah.
We're all physical beings.
Yeah.
Yeah, so obviously these things happen. I'm sorry. Well,
I've got one story
oh
actually,
yeah,
and this is
please.
this is a little bit freaky.
Oh,
So I remember,
quite freaky.
yeah, this one was really weird, and I never got my head around it. So we had this listing, and the property hadn't been. It was like the first time it had been sold in 60 odd years. And
Mhm.
the first time I went to the property, it was gated. You walk in the front gate, and it literally had grass like knee high, like hip height. Just it hadn't been mowed in a long time,
Huh.
and the place was just derelict. There was crap everywhere, and all this grass was cut out. There was real high grass, and then there was just a boxing bag in the middle of the grass where obviously the owner had been boxing, but that was it. Anyway, we walked into the
Boxing as in
property.
the
Yeah, just doing
yeah.
a bit of training, but it's really bizarre. Anyway, so that was your first impression. And then you walked into the home, and there was literally nothing in the home but a massage chair, one massage chair. And I thought, oh, okay, maybe he's just cleared out some stuff. Anyway, I was walking through the property, and I started to go down to the stairs. Had like I guess you call it a basement area.
Yeah.
And because it's, the property would have been circa 1900, 1910, it had a sandstone base. But as you were walking down the stairs, it actually had a new cage and gate put in it. And I don't know what was taking place in this property, but it was like there was a hidden dungeon underneath. And it was really bizarre. Um,
Did you
for
deal
a
with the vendor?
property. Yeah, yeah. Like I was with my dad at the time, and I said, "Dad, this is really weird. Like, how are we going to sell this? This is teenage retreat." But no, I shouldn't joke
Like
around.
a
But
gang
it made you
affiliation?
feel it made you feel really, really eerie, really weird. And I would have been only probably 18, 19 at the
18.
time. I was
Yeah.
young, but that always stood out to me because I didn't know what took place in that property.
Oh, you're making my hair stand on
Yeah,
end.
and the I can still picture it to this day. The security door was new. It was thick steel, and it literally was a dungeon. It was literally a dungeon, and you walked down, and then he had two or three other cages in the property. Dad ended up calling the local police to come through the property as well, just to make
Oh, you
sure
did?
everything was. Yeah, he did because it was just too weird, Tab. It was too
Like
bizarre. It
to
was
make sure
too
it
out
was all
of place.
kosher. There were no bodies
Yeah.
in the sand.
Oh, well,
Oh,
this is it. Yeah, exactly right. But it was all kosher, and that property ended up selling to a developer as a corner position, and the developer bought the one next to it and turned it into townhomes. But that
wow.
was weird.
That
I
is
forgot
weird.
completely about that until you asked
Oh,
me.
that's a good story. It's up there with the headless chickens that Abe was telling me about. Hanging on a washing line.
I spoke to Abe today. Good guy.
Oh, big hi to Abe
Yep.
if you managed to watch this. All right. And so then back to the classic podcast question to wrap up.
Good.
If you could meet younger Riley and get in front of Riley and give him some sound advice, what would you say to young Riley today?
Track your
18-year-old
spend.
Riley.
18-year-old Riley. Um, Track your spending habits.
Yep.
Um, get involved in real estate as early as possible in terms of
Right.
investing, and don't be scared. Don't be scared. Get as much education. Look, at the end of the day, fear comes from not, having
Yeah,
the
not understanding.
information
Yep.
behind you, yeah, and understanding exactly right. And it's really interesting. Dad had been in real estate for 40 odd years, but
Yeah.
his version of the world was buy the crappiest house with the biggest block of land. That was his form of investing, and you're never going to be a successful property investor utilizing that strategy.
Mm.
So I think the best advice I would give myself is definitely reach out to those that are in the know, that those have got the experience behind them.
Mm.
Leverage off the back of that, track your spending habits, and get into it and never look back. That would be my advice to my younger self. Maybe wait a couple more years to have some of the kids as well. Maybe I should have.
You had better hope
I'm
Tiff is not
joking.
watching this.
No, I wouldn't. I
Might
wouldn't
find
trade him
you
for the world.
buried in the backyard.
They're my greatest assets, without a doubt. And that might sound corny, but it's true. I love them to death. You know
I
that.
know you love your kids. You're
I
very
do.
much the family man. Mm.
But yeah, I think that would probably be my advice to my youngest self is just it's not all smoke and mirrors out there. Like if you do arm yourself with the right information, you can do it. You can achieve it. Um, yeah, so I think that'd probably be the advice I'd give myself, Tab.
Awesome. Awesome. Sage advice. All right. Well, a massive thank you to Riley for agreeing to be on the podcast today. They were a good sport at short notice too, but I really wanted to pick your brains and give clients a bit of an inside nod to what goes on and what your role is and where you're headed next. So hope that was great. Awesome. Thanks, Riles. See you
Thanks
around
for
the
having me,
track.
Tab.
Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.